Good afternoon. Since the November meeting of the Monetary Policy Committee, global economic conditions improved somewhat and global inflation remained low. Central banks in advanced economies provided more monetary accommodation, helping to ease global financing conditions, but further easing appears less likely. While downside risks from trade tensions and geopolitical developments remain, the global slowdown appears to be bottoming out. The domestic economic outlook remains fragile. Despite a rebound in local GDP in the second quarter of 2019, GDP contracted in the third quarter. The fourth quarter is expected to show some positive growth. Recent monthly inflation has been lower than the midpoint of the inflation target range. The year-on-year inflation rate, as measured by the headline Consumer Price Index, was 3.6% in November. Goods price inflation in November was 2.8%, while services price inflation remained at 4.2%. Food and non-alcoholic beverage price inflation was stable at 3.5%. The bank's measure of core inflation, which excludes food, fuel, and electricity, decreased slightly to 3.9%. Producer price inflation for final manufactured goods decreased to 2.3% in November. The medium-term inflation outlook has been revised significantly lower compared to the November forecast. The inflation forecast generated by the SARB's quarterly projection model averages 4.1% in 2019, 4.7% in 2020, and 4.6% in 2021. The bank's forecast for headline CPI inflation for 2022 is 4.5%. Headline CPI inflation is now expected to peak at 4.9% in the final quarter of 2020 and settle at 4.5% in the third quarter of 2021. The forecast for core inflation for 2019 is unchanged at 4.2%, is 4.3% in 2020, and 4.4% in 2021. The bank's forecast for core inflation for 2022 is 4.5%. Food price inflation continues to surprise to the downside on a monthly basis and is revised from 5.8% to 4.7% for 2020. Inflation expectations have continued to moderate gradually. According to the Bureau for Economic Research fourth quarter survey, expectations for headline inflation are down slightly for 2019 to 4.5%. Expectations for 2020 declined to 4.8% and to 5% for 2021. 5-year ahead inflation expectations also eased to 4.9%. The inflation expectations of market analysts in the December 2019 Reuters Econometer survey are generally lower at 4.2% for 2019, 4.6% for 2020, and 4.7% for 2021. Market-based expectations implicit in the break-even inflation rate, that is the yield differential between conventional and inflation-linked bonds, have moderated somewhat since the previous MPC. 5-year break-even rates are currently about 4.1%, and 10-year break-even rates are 5.3%. Global GDP is expected to average 3% in 2019, rising to about 3.4% in 2020. In recent months, global trade and manufacturing indicators have exhibited signs of stabilization, and alongside resilient services suggest that global growth rates will hold up. However, a range of downside risks to growth remain. These include geopolitical developments, trade tensions, further oil price shocks, and high levels of corporate and sovereign debt. Inflation outcomes and inflation expectations in most advanced economies remain below target levels. Barring significant shocks, monetary policy in major advanced economies will remain accommodative over the medium term. Since the November MPC, the rand has appreciated by 2.6% against the US dollar and by 1.8% against the euro. The implied starting point for the rand is 14 rands 60 against the US dollar, compared with 14 rands 94 at the time of the previous meeting. While the rand has benefited from improvements in global sentiment, high long-term bond yields reflect concerns about domestic growth prospects and fiscal risks. The GDP growth outcome for the third quarter confirmed that the economy remains weak and vulnerable to idiosyncratic shocks and poor sectoral performance. While growth in the fourth quarter is expected to have picked up, electricity supply constraints will likely keep economic activity muted in the near term. Public sector investment continues to be weak, and export growth remains lackluster despite strong terms of trade. Government and household consumption and private investment continue to grow, albeit modestly. Business confidence remains weak. The RMB BER Business Confidence Index improved to 26 points, whilst the Absa Purchasing Managers Index fell to 47.1 points in December. The SARB's composite leading business cycle indicator also continued to trend lower, while the coincident indicator increased marginally month on month. The forecast of GDP growth for 2019 is revised lower to 0.4%. The forecast for 2020 and 2021 have also decreased to 1.2% and 1.6% respectively, due to lower growth than previously expected in the third and fourth quarters. The GDP forecast for 2022 is 1.9%. The MPC assesses the risks to the growth forecast to be on the downside. Escalation in global trade tensions, geopolitical risks, further domestic supply constraints, and or sustained higher oil prices could generate headwinds to growth. Public sector financing needs have risen, increasing risk premiums and pushing borrowing costs for the broader economy higher. Implementation of prudent macroeconomic policies and structural reforms that lower costs and increase investment, potential growth and job creation remains urgent. The overall risks to the inflation outlook are assessed to be balanced. Demand-side pressures remain subdued, and house rental prices are expected to increase at only moderate rates. Global inflation should also remain low. Food price inflation has continued to surprise to the downside, although rising imported food prices create some caution about the future price trajectory. While the currency has strengthened relative to the November meeting, the risk remains that domestic shocks generate more capital flow volatility and put pressure on the exchange rate and inflation. Other upside risks to the inflation outlook remain, including from fuel, electricity and water prices, and from nominal wage growth. The MPC welcomes the lower inflation outcomes and continued moderation in inflation expectations. While the committee would like to see inflation expectations anchored closer to the midpoint of the inflation target range on a sustained basis, the lower inflation forecast and improved risk profile opens some space to provide further policy accommodation to the economy. Against this backdrop, the MPC decided to reduce the repurchase rate by 25 basis points. The decision was unanimous. Monetary policy actions will continue to focus on anchoring inflation expectations near the midpoint of the inflation target range in the interest of balanced and sustainable growth. In this persistently uncertain environment, future policy decisions will continue to be highly data dependent, sensitive to the balance of risks to the outlook, and will seek to look through temporary price shocks. The implied path of policy rates over the forecast period generated by the quarterly projection model indicated 2 repo rate cuts of 25 basis points each in the first and fourth quarters of 2020. This remains a broad policy guide which could change in either direction from meeting to meeting in response to new developments and changing data and risks. That concludes the statement, and at this stage, we would like to invite you to ask any questions that you might have, and the distinguished panel here would respond to that. If you could prioritize the journalists in the room, please. Yes, ma'am.
Governor Olivia Kumenda from Reuters. I just wanted to get more clarity on your views on Q4 growth, which you expected to be positive. What factors were you looking at, and wasn't the load shedding we had in December a big drag on growth at all? If it was, how big was it in your views?
Is that the only question? Okay, this is a very nice year to start with. We didn't quite factor in the impact of a load shedding. But we also do not expect that load shedding would have had such a big impact on the fourth quarter because it came in December. And whilst it actually also took place, the primary activity that takes place in December is mainly in the retail sector. And the figures and the initial indications are that retail seems to have been doing well in December. And this might have just flown from what we had seen in November. But we have revised our growth lower, precisely to take account of the fact that we expect the fourth quarter to be weaker than what we expected when we last met in November. Okay. Nothing on the webcast. Well, I guess that concludes today's press conference. Oh, ma'am, okay, you are the last one then, because... no, they weren't.
Good afternoon, Governor. Linley from the Business Day. I am sure you're going to moan at me for asking you this, but I'm going to ask you anyway. The ANC just had its January meetings and made its statement on the nationalisation of the Reserve Bank and its continuing willingness to continue with this undertaking. And you've obviously been aware of the spat with the Minister, who has expressed his differing view on this position. I would like to know, given all that noise, how protected or how secure do you feel the bank is, its mandate, and its position in terms of nationalisation?
Okay, there were two hands there. Yeah.
My name is Adelaide Changole from Bloomberg. My question is directed to the Deputy Governor, Kuben Naidu.
You direct the questions to me.
Oh, sorry.
Thank
I
you.
apologize, Governor. My question concerns the Deputy Governor, Kuben Naidu. His term comes to an end at the end of March, just before the next MPC. And I was curious, considering your appointment last year, is he willing to be, is he available to be appointed? Is this something that he would consider if it came, if it was presented to him? Thank you.
Any other questions in the room? Okay. Business Day, you wanted to follow up? Oh, okay. Are there journalists on the line there? Okay. Can I deal with the journalists? The analysts, we will deal with them later. Deputy Governor Naidu is willing and able to serve. The process in terms of the SARB Act is underway. And once that process is completed, the appointing authority will pronounce what the decision is. Nationalization of the SARB. We have said everything that ought to be said about this subject, and we shall leave it to the powers that be to engage with the process. Thank you.
Okay. Governor, we have a question from Razia Khan from Standard Charter. Between November and now, what changed? Does the electricity supply risk to growth? Just the electricity supply risk to growth? How much scope for further easing? And
Any others from there?
And another one from Peter Montalto. Governor, does this move indicate anything about your comfort on the risks of a Moody's downgrade in March? That's all.
Thank you very much. What has changed since November? Obviously, we did have load shedding. It did have an impact, but there are a number of other factors here at play. Suffice to say that on the growth side, the revisions are really marginal. It's from 0.5 to 0.4. So that's nothing to really write home about. What does it say about the scope of future rates cuts? I don't know why cuts and not hikes or no holds. But if you come to the March MPC meeting, you will know what the future actually holds. Peter, risks about the Moody's downgrade. We never try to speculate what the rating agencies will decide. Suffice to say that our decision on the monetary policy stance has been purely based on what we see as the outlook for both inflation and for growth going forward. If a downgrade does take place, it will be a shock, and when we will treat it the same manner that we treat any other shock, and we will try to see through it. And if there are any second round effects from such action, we will respond to the second round effects rather than to the actual Moody's action. Any other questions in the room? In the absence of any, thank you very much. That concludes the press conference of today, and may you have a very happy and prosperous 2020.